Shadow of Truth with your host, Rory Hall from thedailycoin.org and Dave Kranzler from investmentresearchdynamics.com. And today is Thursday, February 23rd, 2017. And we certainly appreciate everybody being here. Thank you so much.
I didn't get the exact comments. I don't know exactly what he said. I know yesterday I thought he said that their administration supports a strong dollar. So I don't know exactly what he said today.
Well, I thought that Trump wanted a weaker dollar.
What's that?
I thought Trump wanted a weaker dollar.
Well, I don't know that Trump's really indicated that either way. I think everyone's assuming in order for him to jumpstart exports, he's going to have to take the dollar down a lot.
Gotcha.
If he's going to do what he says he's going to do, he's going to have to get the dollar to fall. But I think yesterday I had seen where Mnuchin had made some comments about the administration supporting a strong dollar. Who knows? That might have just been rhetoric. Like I said, I haven't been able to find on any of the news sources that I go to. I can't find what he exactly said. Zero Hedge didn't have anything other than that. He spoke, and that's what caused the dollar to drop. The dollar dropped before Mnuchin was speaking, though. So what I think is going on, because I don't see anything where he would have made any statements. I don't see where he says anything about the dollar here. At least it's not in this article. What I think is I think the market is seeing that the economy is heading south. I think, they took down gold on the premise that the Fed was going to keep raising rates. I mean, that doesn't necessarily, that's not why gold was taken down. It was manipulated lower. But, or whenever it's been getting hit, it's because a Fed guy comes out and says, an interest rate hike's on the table for March, and that's total BS.
Of course it is.
They're not going to raise rates in March. So I just think I think the market's sensing. Well, first of all, there's a lot of inert momentum behind gold. I mean, especially from the physical market in the East, but also, money managers are, I guess, piling into GLD or whatever. And I don't think that really drives the market per se. I still think it's being driven by the physical market, and the commercial banks the bullion banks are already quite net short COMEX futures, and they don't want to get too short because, who knows when it's going to happen, but one of these days they're going to get their lungs ripped out on those shorts. And so I think whenever they smack gold, like yesterday is a good example. I think when gold gets smacked and it's obvious manipulation, it's been bouncing back very quickly. Yesterday it bounced back in about 5.5 hours.
Was it that long? Because it looks like it didn't take quite that long.
Well, yeah. I mean, if you go by Denver time, it got smacked when the COMEX opened. So just say right around 6:30 is when it got hit. And then when the Fed minutes were released, was that Tuesday when the Fed minutes were released?
Yes. Yeah. No, it was yesterday.
Yesterday, yeah. And I guess it's sort of conveying that the Fed's wavering again on an interest rate hike, despite what they're saying in public, for the March meeting. So, and that's when gold shot up.
Well, I mean, the Fed, they always waver. I mean, they're always coming out with raise interest rates, not raise interest rates. I mean, that's their game. Good cop, bad cop. I mean, that's been going on for close to, going on 3 years now. I mean.
Right, but I mean, some of the Fed guys have been coming out. It is good cop, bad cop, but the market is choosing to believe the bad cop story, and that's the reason being attributed for why gold keeps getting hit. But my point is that it's not staying down very long once it gets hit and it bounces back.
Well, and
And
that
to me,
goes back.
that's very bullish.
Yes, and it goes back to what we were talking about Monday, as far as it takes more and more effort and more paper every single day in order for them to get any type of movement whatsoever. And then as soon as they come in, and like you said a moment ago, Dave, they can't go much more short than they are, otherwise they're going to be in trouble or potentially get themselves in trouble. So how much room do they have left at this point?
Well, they can still, they're still not near, on a relative basis, they're not near their all-time highs in the net on a net short basis, but it's getting pretty close. And typically, when they are at a very high relative net short basis, that's when they start trying to trigger the hedge fund sell stops to get the hedge funds to puke out their longs so that these guys can cover their shorts. And they've been playing that game for as long as I've been following this market, which is, over 16 years now.
You would think somebody would catch on to that after a while.
You know what? Everyone asks me that question, and all I can say is I don't know why the hedge funds continue to fall into this game. And the only answer I can give is that most of these hedge funds are big macro hedge funds, and the gold futures is a small part of their portfolio, and it's in there because of the fact that it tends to be inversely correlated with stocks and in general with bond prices. So it's part of their hedge, right? So and it also it helps out when they have gold in there. It helps out like their Sharpe ratio statistics and some of the other statistics they show where they can point to it and say, see, the way we have our portfolio structured, we get better returns with lower risk, and gold's part of that equation. So I don't think they really care if they make or lose money on their gold position. I think they just they put it in there, they put their sell stops in, and and then when it's going higher, they chase momentum and they pile it in and they follow the market higher with sell stops, and that's what the bullion banks take advantage of. So it's very profitable for the bullion banks, and it's an extraction of wealth from the hedge fund community is really what it is. I mean, it is an extraction of wealth from guys like us who might try and trade gold and silver, but I really stopped trading it on a day-to-day basis back in 2007. And I had done very well trading silver futures for about 3 years up until that point, or 4 years even. And the last, 06, I did really well trading silver futures. And by 07, I mean, the manipulation became so extreme that it was just, there was no rhyme or reason to how the market moved or why. And I'm talking about, I used to stay up till 2 in the morning and trade the market until it kind of died down, and then I'd go to sleep and set my alarm for just before the COMEX opened, and I would trade it until the early afternoon and take a nap and start all over in the evening. So
wow,
and by the middle of 07, it just got too hard to do it. And I still traded it casually, but I wasn't doing it to create income.
I can't even imagine getting into that situation. I mean, as far as getting into COMEX and trading, and with the knowing that these guys are there, these wolves are waiting on me. I just, whew.
Well, the manipulation wasn't. I don't know. It wasn't as intense. And then all of a sudden in 07 and 08, the manipulation really started to get intense. And it's that's what's remarkable about the run in the market from late 08 until 2011, April 2011 for silver and September 2011 for gold, is that, the bullion banks couldn't keep it down, and I'm sure it's because all of a sudden China showed up and started hoovering physical gold.
I imagine that's exactly
And
what
also the
happened.
hedge funds were aggressively, because you had the money printing going on, and the taking interest rates down to zero or near zero.
Or negative.
Right. And then by 2011, the bullion banks and the central banks, obviously led by the BIS, they figured out how to cap the market and take it down again.
And reprogram their algorithms.
Right.
Because right now, I mean, and I think that it seems like there's one algorithm that controls all the others as far as the bullion banks and the banking industry itself. I mean, or is that too much of a theory? But that's what it seems like, that everything kind of moves. All the markets, so-called markets, kind of move in conjunction with one another. The larger markets, like the oil market, the bond market, the S&P, the DAX, the Nikkei, all of these markets, and that gold and silver kind of come along for the ride. I mean, that's obviously, I think that Craig Hemke over at TF Metals report, I think he's done an outstanding job as far as proving that is correlated to I think it's the yen carry trade. Is that it?
Yeah, I mean, the thing of it is there's definitely technical structure in the market but see, it's all driven by news. I mean, I read an article a couple of years ago, and it said these hedge funds, they monitor everything. They'll even react to posts in Twitter or tweets or whatever you call them. They monitor everything, and they so when a headline hits, GDP's up 1.9%, better than expected. Boom, they go along stocks, they sell bonds, and they sell gold, and it's automatic, and
Right.
and they and so and they buy the dollar, and so. Because it's like, oh, well, if GDP is that much stronger than expected, then the Fed's going to raise rates, and that's the idea, the theory behind it. So yeah, I mean, but it's not the dollar yen and gold relationship that's driving it. It's how the hedge funds react to news, and it's all geared toward what they think the Fed's going to do next, which is idiotic.
Yes.
Yeah. But as long as they all do it and they all move in the same direction, even if they underperform the market, they can still say, well, we underperformed the market, but we did better than 90% of all the other hedge funds. So it's basically they manage these funds for mediocrity, because as long as you're at the mean or slightly above, then then you can say you did your job and you earned your fees.
Look how great I am.
Right. And I don't think that the yen carry trade was set up specifically for the purpose of manipulating gold. I think it's just how it worked out. And now all the hedge fund algos are programmed like that. Well, one of these days, these things are going to, shift their programming. And I think it's going on now, because, like I said, I haven't seen gold behave like this. I mean, to me, it even has a stronger bullish undertone than it did last year at the same time. And part of that reason is because it just, and I could probably look at charts and measure it, but like I said, whenever they dump a boatload of futures on the market and push down the price of gold in the paper market, it bounces back very quickly.
Yes. I mean, since we've been talking, Dave, I'm looking at investing.com's chart, and it's live, and it's gone up. Gold has gone up about 20 cents an ounce. And we've only been on the line for about 15 minutes. So I mean, 20 cents is not that big a deal, but it's just, point is that it's just creeping up and up, and seems to be riding a little wave right now. After like you said, it shot up around, I guess, around COMEX Open, somewhere around that time is what it looks like.
It was actually an hour and a half before the COMEX Open, and I think that's when the interview with Mnuchin was released.
Gotcha.
That's the only thing I can find.
Silver got up there pretty good, and now they're beating it back down.
Well, yeah, because there's also the silver, in short period, in very short duration periods, it tends to be correlated with the S&P, and the S&P is somewhat weak this morning. So there's times when most of the time silver is correlated with gold, but sometimes it seems to be correlated with the S&P. Sort of the hedge funds that are programmed to look at silver as an industrial metal and not a monetary metal.
Yeah, and that makes sense. So what do you think is where do we stand at this point from your perspective, Dave, as far as the market, the gold and silver market? Let's look at silver. I mean, you still think that it's going to go a lot higher this year, or somewhat higher than last year?
Well, I think we're going to have a better year in 2017 than we did in 2016. And, I could be wrong. Who knows? Maybe these guys will figure out a way. Maybe these guys will figure out a way to get a grip on this and push it lower again. They're gonna need some cooperation from the Eastern Hemisphere. It's very possible out of nowhere the Eastern Hemisphere could stop, or slow down their gold purchases. I mean, that's something we just have no control over. But if the fundamentals in the underlying physical gold market remain constant the way they are right now throughout the balance of the year, and there's going to be some slowdown in the summer period because that's just a seasonal thing over there. Although China hasn't been going away in the summer, India kind of goes away a little bit in the summer. I think that we're going to have a better year this year because I just think the fundamentals keep improving. And, at this point, there's still somewhat high expectation for the Fed to raise rates a couple times. And that's built into the expectation and the pricing in the gold market and the dollar. So, if my view on the economy plays out and that it's a lot weaker than a lot of the manipulated headlines are showing, and the Chicago Fed National Activity Index came out and it was a lot weaker than was expected, and that's a really broad index, and it fell in January, and that tells you that, and that has like 85 different variables that make up that index, and to move the needle on it is very hard. And when it falls, it means things are pretty weak. In fact, it says here in the summary of it that I'm looking at, 49 of the 85 indicators or the sub-indexes that it uses were negative. So, even though you're seeing these bullish headlines about the housing market is still very fundamentally weak, and slight moves in interest rate really sent it reeling. So, and the auto market's about ready. It is starting to roll over and fall out of bed, and that's been a big driver in the economy. There's nothing Trump can do to fix that, to change that. I mean, I did see an article yesterday where some outfit is now offering 120% loan to value mortgages that you can use the extra 20% to pay off your student loan. And that's exactly the same kind of crap that got us into trouble in the mid 2000s. So, at any rate, the bottom line here is I just think at some point the Fed's going to, they're going to come out and do the good cop, bad cop thing all year. And maybe once again in December, they'll do a gratuitous raise. But when you think about it, It's debatable whether a quarter point hike is even a raise. How can you even call that an interest rate hike? It's a quarter of a point. It barely moves the needle on interest rates. I mean, interest rates short-term rates were at, or Fed funds were at 5% before the 2008 de facto financial collapse that they call the Great Financial Crisis. So, the Fed was able to take Fed funds from 5 to 0. Where do they go? Where do they go now? If the economy all of a sudden takes a dump, which I think it is.
Well, I mean, and historically, the bond rate is around 6.5%, something like that. I mean, so even at 5%, it was still a little bit low.
Well, you're looking at the long term,
Yes.
the longer end of the market. I'm just talking about Fed funds and where it was in the mid 2000s relative to where it is now. Think how many quarter point hikes it would take to quote unquote normalize interest rates, whatever that normalize means. I mean, in 1981, Volcker jacked the Fed funds rate to 21%. Is that normal?
Well, it was at that time.
All through the 1980s and early 1990s, Fed funds rate were, double digits or just below double digits. Is that normal? No one can tell me what normal is. It's the dumbest idea I've ever heard. Normalize interest rates. What does that mean exactly? If you want to say the 5% Fed funds rate was normal, okay, think that's almost 20 more interest rate hikes.
Jeez. Yeah, and at their current pace, that would be 20 years.
Right, exactly.
Lord, which all of that, everything that you just said, Dave, in my opinion, lays the groundwork, lays the groundwork for a cashless society in order for these banking cabals to be able to come in and dictate how much they're going to steal from us, because right now they can only do it in these really kind of a shadowy way. But if they push us into a cashless society, then they can just steal outright and keep themselves alive while keeping us enslaved in their monetary prison. And are we going to wait 20 years to see, quote, normalized interest rates? That ain't going to happen.
Whatever that means.
Yeah, whatever that means. It's not going to happen. That is not going to happen. I mean, and as far as them, I mean, can you imagine if there was a 5 or 6% interest rate at this point, what that would do to the national debt? My God, on $20 trillion, we would be bankrupt. Well, we are bankrupt, but it would be known. It would be seen. You are, in fact, bankrupt. Right now, they can hide it. And since we've been on this call, Dave, I keep watching this little ticker. Gold is now up $1.40 since we've been talking. I mean, it just keeps moving higher and higher. Better get it while you can. Well, obviously, I haven't had a whole lot on my mind this morning. Do you have any more on your mind?
Yeah, I need a nap. I got up early to play tennis, 6 a.m. Denver time, and I'm not doing that again. It's too early.
That's very early to be that active.
So, and then I got to head up to Boulder here in a couple hours. The Boulder Libertarians invited me to come to their weekly luncheon and talk about real money.
Well, that should be cool.
I think it's interesting that there's a group called the Boulder Libertarians in Boulder. I mean, Boulder is like, one of the quintessential liberal cities in the country. I mean, it's Berkeley in the Rocky Mountains. I mean, these guys must feel like they're part of a leper colony in Boulder. And the Boulder newspaper is called the Daily Camera, and when I was growing up, everyone called it the Daily Communist.
Oh my God!
So I'll be interested to see what these Boulder libertarians are all about. You know, are they the liberal version of libertarians, or are they the hardcore guys?
Oh my goodness. Yeah, well, just go and do your thing and make it happen.
Right.
Hopefully you'll get out alive. Oh my goodness. Well, I guess that's as good a place as any to wrap this thing up. And I guess we'll pick it up on Monday and see where we stand.
That sounds great.
All right, Dave. Have a good weekend.
Gold continues to move higher here, buddy. I mean,
Yep.
It's up almost $2 since we started this podcast.
There you go. I mean, like I said, get it while you can. Well, you guys have a good weekend, and I guess we'll talk on Monday.
Thanks, you too.
All right, buddy.